After apartment construction in Raleigh-Durham kind of sort of cooled a bit, big blocks of new supply are on the way once again. We'll explore what a second surge in development for this cycle means for the Metro's performance outlook on today's edition of Apartment Market Dynamics from MPF Research. I'm Greg Willett. Cameron McIntosh is here as well. Cam, you are from North Carolina. That means that over the Thanksgiving holiday, you were back home and got to see some of this apartment construction firsthand. Tell us what you saw.
I celebrated Thanksgiving on a farm about 45 minutes outside of Raleigh, so that means everyone at my house was excited about the neighborhood's new Costco. We don't have much apartment right around farming country, but I did get to see a bunch of the new properties under construction as I traveled around Raleigh. Let's take a look at this chart that shows ongoing apartment construction in Raleigh-Durham during this economic cycle. Building got going pretty quickly, ramping up to around 10,000 to 11,000 units under development from late 2012 through the middle of 2014. Activity then slowed down to 6,600 units under construction as of the fall of 2015. Since then, there's been some acceleration once more. We're showing properties that total 9,365 units under construction as of the end of third quarter.
All right, so let's look at those numbers from a different point of view, translating product under construction into totals for actual deliveries. Annual completions got as high as roughly 8,200 units in late 2014, but then slowed to a much more manageable figure of just 2,208 units as of Q3 2016. But we're about to boost the numbers drastically. Scheduled completions in Q4 alone matched the tally from the previous 12 months, and by spring 2017, we should be bringing on new supply at an annual pace between 6,000 and 7,000 units.
As in a lot of markets, much of Metro Raleigh's building this cycle is in the urban core or in urban adjacent zones. Roughly 2/3 of the units on the way across the metro are in submarkets that lie within the city of Raleigh. That includes about 2,900 units specifically in the central Raleigh submarket. Moving to the suburbs, active areas include North Cary-Morrisville, where about 1,300 units are under construction. Plus, there's Chapel Hill-Carrboro, where there's a little more than 900 apartments in process.
As we again kick up apartment deliveries in Metro Raleigh, it's going to be tough for occupancy to hold at today's level. That's despite the fact that the local economy should continue to perform well. Coming off a current rate of 95.4%, we're anticipating that occupancy backtracks 50 to 100 basis points over the course of the next year.
Annual rent growth in Raleigh-Durham has registered at roughly 4% to 5% over the past year and a half. As with occupancy, the near-term rent growth performance probably won't quite reach recent highs. Our forecast calls for yearly growth right around the 3% mark. It's likely going to be a challenge to get any pricing power in Class A properties, given the volume of new supply that will be moving through the initial lease-up phase.
That wraps up our look at the multifamily sector in Raleigh-Durham. For local legend Cameron McIntosh, I'm Greg Willett. Thanks for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.